Good evening, good morning, good afternoon, everyone. Welcome to Stalker Team, the Investors Channel. Today, the 11th of February 2025, we're happy to have you here. Before we start our edition for today, let's just make a disclaimer. Every information shared on this channel is for education purpose only. So please do your due diligence or consult your financial advisor before making any decision. And on that note, we thank everyone for being part of this show, for being part of this channel. We thank you for subscribing, putting on your notification bell, and also sharing your feedback on and off this platform. We also thank everyone who has actually joined our Stalker Team Live community on X, Stalker Team Live on X. So please continue to join our community because that's where we share with you all the breaking news in a very bite-sized form that can actually make it easier for you to digest what exactly is going on in the stock market and how it affects your finance or how it affects your investment portfolio. Today, we are talking about three mega cap stocks. If you remember very well, in January, we actually talked about the mega cap stocks to own in 2025. We mentioned a couple of mega cap stocks. We gave price targets. We also gave rationale behind those price targets, and also we also argued on both sides of the aisle, on the bearish side, on the bullish side, and why we are actually bullish on these stocks in 2025. Today we will be looking at three of those mega cap stocks. One of them was not, or let me put it this way, it's not in our top picks or even on our watch list at all. It's not a buy, it's not a sell, it's a hold. I'm going to be discussing that stock because we've been getting a lot of feedbacks from our audience, our followers who are actually, some of them actually have this stock in their portfolio, or they plan to have it, or they are actually kind of worried that they don't have it, or if they do, what's the implication because of the specularity of this stock. So today we'll be talking about two mega cap stocks, reviewing them, how they've performed, what we think going forward, especially going into the end of the first quarter and the second quarter of this year, and also why we think these two stocks are still two of the best mega cap stocks to own. Without wasting much time, let's jump right in for today. So the first mega cap stock that we'll be reviewing today is coming out of the feedback that we had from our audience, followers on this channel, which is Tesla, ticker symbol TSLA. Tesla is perhaps the most popular electric car maker in the world. The company is also very much invested in the AI technology. The company is building robotics. Tesla electric vehicles are now also being built alongside full self-driving. Tesla is also investing heavily in robo taxis. Tesla is investing, or has invested in the last 10-15 years in alternative energy, especially solar power, especially the Tesla roof and all that. Tesla has invested heavily in a whole lot of technologies that you might actually think they are either moonshots or they will be revolutionary in their prime when they actually mature. But there is something so very much peculiar about Tesla, and that's why on Stalker Team, Tesla is not part of the mega cap stocks that we actually recommend. Of course, you have to do your due diligence, but on Stalker Team, we are very, very fine with anyone who have opposing views to us. And here is the argument we have against Tesla. Number one, the key person risk for Tesla is quite huge. You agree with me that the richest man in the world, Elon Musk, who is the CEO of Tesla, is also the CEO of SpaceX, is the CEO of X, which formerly Twitter, is the CEO of Neuralink, He has so many things going on. He's also the head of the current president's Doge, which is Department of Government Efficiency. So his hands are pretty much very full, and he is not lacking in a whole lot of ventures that he has actually invested in. Tesla is a success story, no doubt about that. But if you look at the trajectory of this company vis-a-vis some other mega cap stocks that are more or less peers to this company in the Magnificent Seven on Wall Street, Tesla has really underperformed. This year alone, Tesla is down by about 15%. Yes, you might actually have the argument to say, oh, yes, last year Tesla was down for pretty much almost the 80 to 70 to 80% of the year for the first 9 months of the year, and the stock picked up towards the election and after the election in the US. But look at what has happened. The stock has given back about 15% out of the total gain that it made. So it has given back about 15%. 6 months down the line, Tesla is still up by about 60%. Just follow me on the chart, about 60%. But if you look at that chart, you will actually see that the entire gain came towards the end of October last year. So it's pretty much a whole lot of speculative pressure, speculative buying that Tesla, is going to gain so much because of the, proximity of Tesla CEO Elon Musk to the current President Trump. But we cannot actually say for sure that this is going to play out. So a whole lot of things. Tesla's deliveries in the last 2 years has been really, really down. And even in Germany, 3 days ago, the deliveries in Germany is down by over 50%. In China, BYD is the leader. So we don't actually believe Tesla is a buy for now. Yes, this stock is quite speculative. Tesla could still do 70% this year, because that's the behavior of the stock. But as an investor, if you want to actually buy this stock, you have to actually price in the other risks that I've mentioned, competition, a whole lot of, political challenges, a whole lot of technological challenges as well. You can also see what's going on between OpenAI CEO and Elon Musk as well. But I won't say more than that. We don't necessarily see this as a buy or sell. It's a hold. The next stock I will be going to is none other than Meta. Meta, the parent company of Facebook, has been doing very, very well. 3 weeks ago or less than that, we actually did a full episode where we said Meta is a buy because of strategic investment that this company is making in AI. Meta is not just investing in AI for other companies to benefit. Meta is investing in AI infrastructure, data center infrastructure for its own business. So when a business invests so much for its own business, especially to the tune of close to about $80 billion, that is quite huge. It shows that the business actually has a huge confidence that the investment is going to actually benefit the bottom line. And if you can see, just year to date, Meta is up by 22%. The last 1 year, a very decent amount, 54%. And, even in the last 1 month, you can actually see that this stock has actually performed. And we still believe Meta could end this year with a price target of almost about 1,500 per share. There might actually be a stock split whereby they divide this the entire stock price, the unit price, by 10. So if you have one, you now have 10, and the stock will actually look a little bit cheaper. The last mega cap stock I'll be discussing today is actually Apple. We said Apple is going to outperform this year. Yes, the stock has been very volatile, not necessarily volatile. The stock has been reacting to so many headlines in China, out of China, within the company. But today, Meta is giving an indication that they are actually very serious about the AI. They have actually announced that they fired Baidu, fired quote unquote, and they are now going with Alibaba, cloud, Alibaba AI to deploy Apple Intelligence, which is Apple AI in China. This is expected to actually boost Apple sales because number one, Apple is going for an indigenous company in China. Number two, the fact that Apple wasn't able to roll out Apple Intelligence in China, it has really affected the sales of iPhones, especially the last iPhone 16. So this is expected that it's going to actually boost Apple sales in China that has really been declining. Why should you still see Apple as a buy? Apple will always reward shareholders. What do I mean by that? Apple will do buybacks. Buybacks is when if a company feels their stock is undervalued, they will actually take out money from the savings of the company, from the savings of the company, and they buy back some of these shares from existing shareholders like you and I. So if you are not selling at that time, you actually see that your stock actually does, it does better within a few months or a few years down the line. Apple announced $150 billion last year. We are not sure how much Apple is going to announce this year, but Apple still has about $141 billion in cash. So we still expect that around second quarter, third quarter, Apple is going to be announcing another buyback, coupled with the Apple Intelligence relaunch in China, coupled with the likelihood that Apple will actually be launching a new looking iPhone. There's a whole lot of bullish sentiment that we see for Apple. So what do you think? Do you actually think Tesla is still a buy with the volatility, the key man risks, especially about the founder of Apple? We actually believe that the risk in Tesla is very much linked to the founder. For Apple, if Apple can actually get its act together in China, like what it's trying to do now, it's going to be very positive. For Meta is quite positive. The company is very much more focused, even better than Apple, better than Tesla. Tesla is all over the place. The CEO of Tesla is so much involved in so many things, and as a channel where we actually talk about long-term investing, you don't want to have so much volatility, or the CEO of a company that you have heavily invested in is very much distracted. This is nothing personal about Elon Musk. It's business, it's money, it's investing. So you don't necessarily have to be too emotional about it. But this is what we think. What do you think about Tesla? What do you think about Meta? What do you think about Apple? Put your comment in the description button segment below. We are very happy that you joined us today. If you haven't subscribed to our channel, please subscribe. Put on your notification bell so that you don't miss the update for tomorrow. We have a surprise for tomorrow, especially for a whole lot of our audience who are looking to still build their portfolio, especially when we are still very early in the year. Thank you so much for joining us. On that note, please keep investing, keep growing. Take care and bye-bye.